Welcome back. You're tuned in to Bazaar Morning Call here on CNBC-TV18. As promised, let's welcome Parag Thakkar, Senior Fund Manager at Ford Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you. Parag, we were just discussing about the Nifty IT index making a big comeback. Year to date, it's an underperformer. You compare it with the Nifty. You compare it with the NASDAQ as well. But the last 1 month, actually, the boys have shown up. The tech boys, they are feeling it, and yesterday at Motilal Oswal that went ahead and upgraded the stocks as well. From this pack, what do you prefer? If you could name two stocks from the IT pack that you like.
So basically, I am equal weight in IT right now in my portfolio, and with large weights on Infosys, Tech Mahindra, and Mphasis. These are the three stocks in my portfolio, and I'm overweight, equal weight, but Infosys I'm overweight. Basically, you cannot ignore this cash flow generating companies for long. My view is that Infosys generates a free cash flow of around 35,000 crores. Right? Market cap is 6,30,000 crores. And they pay you 90 to 95% of that free cash flow as dividend or buyback. I would say 18,000 crore buyback is going on, right? So I would say that 5%, 4.5 to 5% dividend yield, 5 to 6% free cash flow yield. And you are looking at now an increasing probability of December rate cut in US, plus signing of trade deals with China is also progressing well. Hopefully, keeping fingers crossed, it will happen with India soon. So I would say that the valuation in this particular space was very attractive. These are high free cash flow generating companies. So I would say that this is not a valuation at which you will go underweight in these companies.
Okay, all right. You'll not want to go underweight, and Infosys is the one that you like.
Infosys, Tech Mahindra,
Mphasis. Got it. All those three stocks.
Now, you see Tech Mahindra's CEO's comments on the Mahindra Investor Day.
Yeah.
They are very interesting. Yeah, he said that till FY27, their target is to get to that 15% EBIT margin, which he has promised to the street when he joined. Then after that, he said that the growth will be supersonic. Now, how growth will be supersonic in IT? That is because of this AI thing getting translated into revenues. That means he's expecting that from FY27 onwards, going into FY28, these AI deals, right now also the deal wins are very good, right? We are not seeing ramp up of those deals because everybody is in wait and watch mode in US. So once you see the AI deals getting larger and they are getting reflected in revenues, which is after FY27, then you will see growth also in this space. So it is just a matter of time. You have to buy at right value and wait for growth to come.
Yeah. Parag, hi, morning.
Good morning.
I'll just segue from what you left off at Tech Mahindra, but with Mahindra specifically. My colleague Shireen spoke with all the business heads and CEOs across the Mahindra groups. Big targets, right? In terms of 5 years, there was something on M&M and M&M Finance and so on and so forth. Leave Mahindra and Mahindra, the auto business aside. Anything else out of that on the back of what you heard at that investor conference and at the interview, which you would like to get behind?
No, I would like to say that Mr. Anish has done wonders for the group, right? Of course, the entire team deserves credit for that. The way they launched SUVs one after the other and got a huge success. Yeah. And they got a tailwind from tractor business also. And plus, their ambition for the other growth companies like Mahindra Lifespace, Mahindra Holidays is very encouraging. And they are ready to support these companies financially or capital-wise, any perspective. They are able to, they are most capable and they are willing to support all these subsidiaries also. So I would say that as of now, out of them, I have Tech Mahindra in my portfolio, but definitely Mahindra Lifespace and Mahindra Holidays are something to consider. They are right now small companies. They can become big. They have all the right to win and huge support from parent.
Huge support from parent as well. Got that. I mean, your call on Piramal Finance has worked out. Great run, right?
By God's grace, luckily, yeah, it worked out very well, and all credit goes to management, Mr. Jairam and his team.
He was on with us yesterday with Lata at 10:15.
I missed that.
Yeah, you can find it on YouTube. I mean, the interview was more of the sector, but of course a little bit about the company as well. But if you've looked at the numbers and updated it as of yesterday, where does it stand valuation-wise and I mean the upside-wise from here? You think it's basically it came at about 1250, right? And now I'm not sure where it left off yesterday. Closer to 17.
So I tell you, I was on your conclave, and when
Yes.
it was about to list as Piramal Finance, the last closing price was 1124.
Wow. Yeah.
Today we are at 1590, so it is up by 35% from your CNBC conclave day. Yes, the stock has done beautifully. No regrets. Very happy about it.
No, why regret? It's done very well. I'm just.
But I would like to say that, see, when a stock does so much well, it can take a break also. So I would not thumb the table and say that a new investor should buy at this price. One should wait for consolidation.
Parag Thakkar is still with us. Parag, thanks for waiting. The mid-tier banking space, and we talked about Piramal Finance and some of the other stuff earlier. I think you're bullish on. Najil was telling us Federal Bank.
Federal Bank
is that the top idea out of that space, that category of stocks?
Yeah. So we had City Union Bank. Luckily, City Union Bank did very well for us, and now we are overweight on Federal Bank. We have a 4.5% weight. And we like Mr. Manian's strategy, which was demonstrated in this quarter very well, where actually margins were supposed to decline, but they expanded margins by focusing on current account and fees. And plus, they are now lending to mid-yielding segments where risk-reward is favorable. So I would back that strategy. And I feel that the bank's DNA was always very good. They were a very conservative bank, lending to SME and retail. They never take disproportionate risks, lending to microfinance for high yields and all that. So we would love to back Mr. Manian's strategy, and we would be a long-term investor in this company.
Okay, all right. Federal Bank is something that you do like. One stock that's actually caught everyone's attention in terms of volume moves has been Karnataka Bank. Massive move is what we're seeing out there. Volumes extremely high. So let's see whether or not there is something that the street is getting right on this one. But in the last few trading sessions in a wobbly market, it's done 172 down 200. Yesterday's high, I think, was 205 or thereabouts. But Parag likes Federal Bank. Parag, final question before we let you go. Now, the Nifty has been doing okay. It's holding closer to around the all-time highs. And that's because the big boy Reliance Industries has got a couple of triggers. Going through a Jefferies note as well, they are fairly bullish on the stock. I think from a market perspective, where Reliance performs, it helps the Nifty because of its weightage. What's your view?
So Reliance is my largest holding as of now in the portfolio. Reliance, SBI, as I said, Federal, Infosys, L&T. These are my largest holdings. The simple way to look at Reliance is this: that market cap is close to around 20.5 lakh crores. And I would say that Jio is a fantastic business. You imagine 50 crore subscribers using 24/7 all the way, and that revenue goes to Reliance, and Reliance makes 50-55% EBITDA margin out of it. So I think the street is valuing Reliance Jio at around 585 rupees per share after Holdco discount. I think it should be much more, first of all. Second, retail. Q2 itself, retail showed 16% YOY growth. I'm expecting better growth in Q3. So these two consumer business, which make 1,05,000 crore EBITDA in total, it should get higher value in case of Jio and should do well from earning perspective in terms of retail. So I would say that if I sum up, and plus the new energy business is starting, 40 gigawatt factory is starting next year. So that will get, say, 150 rupees per share value. If I add it up, I think whatever these brokerages are suggesting, above 1,700 rupees should be your minimum intrinsic value of the company. I would not say target price, intrinsic value of the company. Target price depends on what they do afterwards also, right? Because Reliance is a box from where the value unlocking keeps happening. And plus net debt to EBITDA is in control, which is a major thing. If all businesses are incubated, grown with very, very calibrated debt, which is the most important thing, right? So net debt to EBITDA is below 1x.
Parag, thank you very much for joining in. Point taken on Reliance. Big mover, 27% up on a year-to-date basis, outperforming the Nifty by nearly 10%. Get into